Hello and welcome to Building Foundations for Financial Wealth, my new series I'm going to start with my firm, California Wealth Advisors. I am Kelly Spott, President and CEO of California Wealth Advisors. Welcome. I appreciate y'all listening in. This is going to be a lot of fun, I think. Building Foundations for Financial Wealth is really the basis of my business and how I help people with their financial portfolios and how to build their financial wealth. So the series that I'm going to start running, I think will be very interesting. Today, I'm going to cover a broad view of investing and how to take advantage of different kinds of markets with different kinds of accounts. And then I'll have another series that will talk more about stocks, bonds, mutual funds, another series that will go more into depth in non-traditional investments and then traditional investments as well. So I think this will be really fun, and I'm looking forward to helping all of you out there that are listening in. So building foundations for financial wealth, that's the basis of this series. Again, we want to help you build your wealth. We want to help you protect your wealth, if that's what you're looking for as well. Create that income perhaps you're looking for. So these are all the things that we plan on doing and educating you all on during this webinar and this seminar workshop. Okay, so let's move on to the next slide. I do have a radio show for those of you that are unfamiliar with that. It's on KNX 1070 AM. On Saturdays and Sundays it plays, which is very nice for a lot of folks to listen to. I also have all my shows on my website. So if you go to californiawealthadvisors.com, I have all my previous shows on there, and they're titled to what I talk about for the most part for each show. So if that's of interest to you, then please go there or listen on the weekends. We'd love to have you listen in as well. I also have my book, The Great Retirement Mystery, How to Avoid the 6 Biggest Blunders. You can get that on my website as well as from Amazon. And I think this book, retirement is in the name, but I think it's important for people to know that this is a good book for anyone looking to invest, looking for different strategies that might be available to them. What things to avoid. I wrote that how to avoid the 6 biggest blunders. So those are the different things you need to avoid as well. And that's true for anyone, no matter if you're 20 years old or 80 years old. I think that's important to know. So avoid those blunders if you can, and I write that out for you in my book. So by all means, get that if you think that will be helpful for you. So let's talk about the key components to investing. And what's the number one thing I always say to my clients is have a plan. Have a specific plan for you. And that's what we specialize here in doing at California Wealth Advisors. We want to have a plan for you. We want to tailor make it to you specifically. Every client is completely different that we talk with. So that makes our job fun, to be honest with you. But also we want to make sure that you've got out of your portfolio what you're looking for. And it has nothing to do with me, someone else. It's all about you and how we can help you. And the way that we do that is really through diversification. Diversification is key to any portfolio. You've got to have diversification to give you downside protection, alternative investments to the markets, and maybe some money in the markets as well. So what am I talking about there? Well, here is my mass proprietary process. I came up with this a number of years ago to help people visualize what investing looks like. So everything on the planet is here somewhere. So M is the market. That's the red section here. It's red for a reason. I'll go over that in a minute. But that's the stock market. So stocks, bonds, or mutual funds, anything that trades. And then we have alternative investments, like the light blue section. That's the A part of my mass proprietary process. Those are investments that do not go up and down with the stock market. And I'll go over those in a minute as well. And then we've got safe money. When you say, hey, Kelly, I just really don't want to take any risk at all, we go to the safe section there. So that's the dark blue section. So let's go over those each individually for you here. So the markets. All right, the markets. As my chart here shows, markets go up and down. They absolutely go up and down. There is risk involved, certainly, in the market. Now, long-term, stock markets can be great. I have many clients that have contributed to their IRAs or 401ks, their trust accounts for years and years, and they've built up quite a nice group of assets that they have, and it's grown quite nicely. And the reason why that works over time is because you stay invested. And that's one of my biggest blunders I talk about in my book, is to try and time the market. When you stay invested, good markets or bad markets, or your dollar cost average into the market can be great for people. And that's why I say 401ks, IRAs, when you continually add to them, it tends to grow very nicely for you. That's the historical return, of course, not a guarantee. Which is a good thing and a bad thing about the markets as well. Another good thing about the markets is they are liquid. You can always get out of them if you ever want to. So again, I don't like timing the market, but if it's time to get out of the market for you for a reason, maybe you're buying a house, building a business, whatever you're doing, then great, we can go there to liquidate something. But of course, it can be volatile. We all know that. Markets are definitely volatile. They always have been, as my chart here shows, the markets can certainly go up and down. Let's talk about alternative investments, and that's the A part of my master proprietary process. That's the light blue section there. What am I talking about there? Well, real estate, a lot of times, private placements, precious metals, anything that doesn't travel with the market, anything that does not go up and down with the markets is considered an alternative investment. Oftentimes, the real estate programs we do, the private placements we do, can create income for you, can create very nice growth potential too. And what kind of real estate am I talking about there? Well, it depends on the markets we're in. Right now, I'm looking at apartments or housing, storage, industrial warehouse space. Those are the kinds of real estate I like right now. Not doing retail, not doing housing, not doing hotel. Those kind of investments in real estate, I'm not really doing now for people. But maybe in 5 years or 10 years, those might look good again. So again, a lot of times these do create nice income streams for you. You can do these in retirement accounts as well as outside of retirement accounts. So if you have a trust account, for instance, or a joint name with your spouse, and we do some of these real estate programs for you, just to give you an example, we can create income for you, 5, 6, 7% income. A lot of times they pay. That's a lot of times tax advantage to you as well, which is nice. And then you have growth from the real estate as well. These are non-liquid investments. They're not traded. So that means they're illiquid, and that can be very good for part of your portfolio. Not all your portfolio, but part of your portfolio, having a real estate arm is very good. Generally, these programs will last anywhere from 4 to 7 years. Sometimes it can be less. If they make a lot of money on the properties and they want to sell them, they'll sell them, send you back the profits into your retirement account or to your trust account. Could be 7 years too, depending on market fluctuations, because real estate fluctuates too, just like anything else. So again, having diversification in the alternative investment space, I believe, is very wise for a lot of people. I think it brings comfort to a lot of people, especially when they've got large 401ks, 2 million or so in a 401k, and they've been in the market for many, many years, and they're just not comfortable with staying there. So doing some alternative investments or some safe investments is a good option as well. Let's talk about safe investments. So safe investments, that's the dark blue section of my master proprietary process. These are annuities, life insurance, any kind of an insured type of product. They're insured by the issuing insurance company. If I'm talking about fixed indexed annuities or life insurance, you won't lose money because it's guaranteed by the life insurance company. I can create growth from these and income, and that can be for your life, depending on how we set it up. For annuities specifically, you can withdraw 10% for free every year, and it is a very nice legacy passing tool as well. So for instance, I had a client come to me, very high net worth. He said, I'm worried about my children. He was older, his wife was younger, he had 4 young children. And he said, I want to make sure my assets go to my children, but I don't want to have them pay a lot of estate taxes. So we did $1 million annuity for each one of his children, and that annuity will go to them tax-free when he passes. That's a great legacy passing tool. So I like that. So there's a lot of different reasons why we like these safe investments. Now let's talk about annuities specifically. There's 3 kinds of annuities. And I want to start by saying annuities are not good or bad. It just depends on what you're looking for. And it depends also if you're talking about an old annuity, 5 years or older, or a newer annuity, because they've improved over time. And back in the day when I did annuities, they were very different than how they are today. They've improved quite a lot. So fixed index, or variable annuities. So a fixed annuity is like a bond. You put money in, you get a certain interest rate, it matures at a certain date, you're done. That's a fixed annuity. Again, much like a bond. On the other end of the spectrum is a variable annuity. That's going to go up and down with the market. That's the red of my chart here that you're looking at. See those ups and downs? That's variable, right? Variable means something. They actually buy mutual funds. Those are in the market. They're buying groups of stocks. So those are going to be going up and down. I never really know a lot of times what you're going to get out of a variable annuity. They can be costly. So a lot of people poo-poo them because of that. But they're not necessarily bad. For my younger clients, they can be good. I have low cost variable annuities that are great. But what I want to bring your attention to today is the fixed index. And that to me takes the best of both of those worlds, the fixed and the variable, and combines it into one. And why do I say that? Well, the green line here is potentially what you can make on the variable annuities. The blue line here is the minimum. So again, I told you you would never lose money with an insured fixed indexed annuity. So that blue line means that's what you're guaranteed. So it does have guarantees to it. I can't say that about the stock market, nor can I say that about real estate programs either, because those can all go up and down. But the fixed index annuity in this case has guarantees to it. Insured product is nice for a part of your portfolio. A lot of my clients like these, especially when they get into retirement. They want to have either income guarantee for their life. They want to have downside protection in their portfolio. This will provide that. So average returns are going to be anywhere from 0 to 9% on average. If I looked over the last 30 years or so, why do I say 0? You're going to have a 0 return because if the market's going down, you will not participate in that. You won't make any money, but you won't lose any money either. I love that. So 0% some years, 9% or even more some other years, but average probably about 4 to 9% if I looked at that over the last 30 years or so. And you can create these that will be creating income streams for you and guaranteed for your life and or your spouse's life as well. And they can be increasing with inflation as well. We love that. We love increasing inflation protected types of portfolios. And that's what this one will do for you. So again, the green line is the potential rate of return. You're never going to lose any money. The blue line means that's what you're guaranteed. The red line is the stock market. And of course, we're not going up and down with that in these kinds of products. So again, annuities are not good or bad. It just depends on what you're looking for. So if you're looking for some of that downside protection, if you're looking for some of that income streams that will last for your life, this is the only place I can go for that. So that's why I like them. The other thing I want to mention here is life insurance. That is the safe section of my master proprietary process as well. For those of you interested in long-term care, or if that's a concern for you, this is where I go. Life insurance with long-term care. To buy a straight long-term care policy these days is very cost prohibitive. So I've stopped selling those a number of years ago and switching to life insurance with long-term care as part of the policy. Usually I have people put money in for 10 years or so. You don't have to put any money in after that. And then you get an immediate death benefit. You get an immediate long-term care policy as well. So these can be nice. You can also turn on income streams with these life insurance policies too. If you don't need the long-term care, if you don't use it, you actually can turn on income streams, which is very interesting. So if that's of interest to you, give us a call and let me know, and we'll help you with that. Okay, let's talk a little bit more about annuities because there is confusion out there about them. So what are the benefits of fixed index annuities? Well, you can take savings that you have in the bank that perhaps is not earning much and turn it into an income stream for you. I like that. It's nice to have your assets working for you. You do have growth potential from annuities as well. You saw my chart a minute ago, and you do have increases. You participate in the upsides of the market, not the downsides, which is nice. That's the protection of principle that we see. And then we can have income guaranteed for your life as well. The annuities, if you do them outside of retirement accounts, can work the same as IRA types of accounts, meaning that they're tax deferred. So they're going to grow for you tax deferred until you decide to take the money out. Now, what's nice about the annuities too is you don't have to start taking money out when you're 73. That's the rule now for RMDs. They can grow for you until you leave it to your heirs, for instance, which is nice. So they're bond-like replacements because you do have some guarantees with them and they do have the income stream that you can. There's a lot more options than that you can create for them. And then predictable income tends to make retirees much happier, is what I've seen over and over again in all the clients that I have. So if that's of interest to you, let us know. We'll sit down with you. Okay, so for those of you new to me, how does our process work? Okay, well, if you want to call in the 800 number, which I'll give you at the end here, this is how we sit down with people. The first meeting, I like it to be in person. We're going to establish and define our relationship. Can I bring to the table what you're looking for? Do I have everything that you might be looking for? So let's make sure that's true, and I can bring to the table what you want. If you want diversification, if you want professional wealth management, that's what I'm going to bring to the table for you. And then I want to make sure that you understand what I'm talking about and how I would diversify portfolios for you specifically. So I'm going to gather that information. That's part of that first meeting too. I'm going to take it back to my office. I'm going to analyze and evaluate the information you've given me, come up with some recommendations for you. And then the fourth process here is develop and present my recommendations to you. And then if you decide, yeah, this sounds great, this is exactly what I was looking for, then we will implement the plan. And then number 6 here really is one of the most important stages of our process, because we're going to monitor regularly your portfolio. We're going to sit down with you periodically every 4 months or 6 months or once a year. Every client's different, and say, here, this is your portfolio, this is how it's performing. Has anything changed with you? Because your risk tolerance may change over time. So let's make sure we're monitoring regularly your particular portfolio to make sure it's what you want it to be. So I do want you to think about where you are. Where are you in your portfolio? Are you very heavily into stocks? Maybe you have $1 million, $5 million 401k or an IRA or a trust account, and it's all in the stock market. And is that where you want to be? And because there's certainly high to moderate risk in that section. So stocks, bonds, mutual funds, variable annuities would be there as well. Then we move on to the safer section, the more protected side, which would be the fixed index annuities, CDs at the bank, cash at the bank. Now, those are all insured in some way. The banks are the insurance companies. And just, I want you to think about where are you in your portfolio? Do you have a lot in the stock market, or are you protected with some downside protection? And if you're not, call us and let's see how we can adjust that for you. So on my website, I have a budget sheet, an asset sheet, and a bucket list. These are all important. I like these people to bring these to me. I manage to the budget you tell me you have. So if you have $2 million in your 401k and you're trying to create $5,000 a month, well, I need to know that. I need to know what your budget is. How much are you spending every month? And so that's why I created this budget sheet. And you can print it off my website. So just go to my website, CaliforniaWealthAdvisors.com, go into the services tab, and the budget sheet is there. Now, if you're not sure where your assets are, maybe you've had many jobs over time and you had a few 401ks or IRAs at different companies, or maybe you have real estate that's spread out. This asset sheet is very helpful for a lot of people because then they can put down where all their assets are. I think that's important for everyone to have. And then a bucket list, I came up with this because I want people to think about what they want to do when they actually retire. What are some of the fun things? Maybe go on a safari. Maybe you're going to drive a race car, take a trip in an RV. Maybe you want to start a new business. So these are all things I want you to think about before you retire, because I don't want you to get to retirement and then you're bored. Let's make sure you've got actually a plan for your retirement. And then, of course, we are a fiduciary. That's how I've always structured my business. I always will. Yes, we take care of you first and foremost. You are very important to me if you become a client of mine. And I will take very good care of you and always put your needs before anyone else's. We are also A+ rated with the Better Business Bureau. We're very proud of that. We do a lot of complimentary services as well. So, for instance, our portfolio reviews every 4 months, 6 months, once a year or so. Again, everybody's different with that. We don't charge to do that. We want to make sure that you're comfortable with the portfolio that you have and see how it's doing. Now, if you're interested in Roth conversions, we can help you with that as well. And I would suggest people start looking at those in 2023, 2024, and 2025, because taxes are slated to go up in 2026. So you want to get those Roth conversions in there prior to taxes going up even more than they are now. We will help you with debt management. We like people to be out of debt, or at least credit card debt, maybe car debt before you retire. That's always wise. We are going to give you cash flow projections, and a lot of my clients come to me for that. They want to make sure they have enough to pay for their living when they retire from their assets that they have. And that's what really we specialize in helping create for themselves. We specialize in that retirement planning cash flow. Emergency funds, we like people to have 6 months or so of cash in the bank. No, it's not earning much, but you've got 6 months of your budget in the bank to know if something happened to you, you can pay your bills every month. And again, retirement planning is a lot of times what we do with many clients, especially if they're younger and they want to look 10 or 20 years out. Well, we'll help you plan for that. We also, of course, are going to provide 1099s, K1s, other tax documents that you might need from the investments that you do with us. We're going to manage those required minimum distributions as well. Make sure you're taking out the correct amount every year once you turn 73 or over. We're going to budget, plan your budget. That's why I created that budget sheet, is to make sure your budget is covered by the assets that you have. And of course, we do a lot of seminars just like this one, workshops. We do client education, client appreciation events. We have a lot of those that we like too. Here's a few of the invitations that we've sent out recently that were on real estate or even stock market. We do stock market things as well. We work with many different types of accounts, 401ks, IRAs, 457s, 403bs, all those retirement accounts we work with. If you have a 401k and you're interested in working with us and you're still working, you can do a couple of different things, or actually 3 different things. You can ask your HR person if you can do an in-service transfer, which means you're still working there, you're still contributing to your 401k, but you want to roll out a large chunk to have us manage for you and give you that diversification, maybe that downside protection that you don't have now. So you can ask for an in-service transfer. You can do a direct rollover from a 401k into an IRA, or you can open a brokerage window, which allows someone like me to come in and manage those assets for you professionally. So this applies to 401ks, again, IRAs, 457s, all those different kinds of accounts. If you want us to work with you for those, just let us know. So we work with many trust accounts, and I do have trust attorneys I work with. If you do not have a trust, I highly recommend you have a trust. So if you don't have one, I have attorneys we can talk with. I also do 1031 exchanges. You do have to become a client to work with us for those. That's when you have real estate rental property that you want to sell, but you don't want to pay the taxes, but you still want the income from it. A lot of times we do those 1031 exchanges. You also have to be an accredited investor to work with us, which means you have $1 million or more of assets outside of your primary place of residency. So 1031 exchange, DSTs, we work with a lot of folks too. We do work with different annuities as well. We can look at those old life insurance policies that you have and see if we can improve them. Maybe we can increase your death benefit. Maybe we can add long-term care. And then Social Security, we also help a lot of people with that, planning when is the right time for you, because that's important, because you're going to get different dollar amounts on different ages. So let's say, make sure you're taking it on the correct time for you. So if you're interested in sitting down with us, call us today for a complimentary consultation. 800-810-8060 is our phone number, or you can email me, kelly@californiawealthadvisors.com. I prefer those first meetings to be in person. I want to get to know you. I want you to get to know me. I can also do Zoom meetings and phone calls as well. So we thank you for joining us. We hope this was educational for you and very helpful. And again, if you have any questions at all, you call that 800 number. My staff will answer that and get you right on my calendar. So thank you so much. Great seeing you all.